Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again on the gold market. So on the gold market the performance looks more evident than in the euro currency, and actually it stands in the direction that we have specified due to the fundamental reasons that we have discussed in our weekly report. So as we suggested, this will be a big drought of the liquidity. The United States Treasury starts grabbing all liquidity that it could. Actually this is happening right now. So in a single session they have placed bonds for 365 billions yesterday. So it's actually in amount the half of the total Russian foreign and gold reserves. It's a couple of days and it will be equal to these reserves. So it's a really big amount. And additionally, as we also suggested, and it's now seems becoming truth, that Treasury offers the premium to the Fed rate, approximately 25 basis points. That makes overall placement interesting to the banks, and they even will get some money out of the reverse repurchase agreements with the Fed and put them in the new issues of the bonds. So this is also, we suggested, as a source of the possible financing of the new placement of the bonds from the Treasury. So both of these processes right now stands underway, but this is only the beginning. It's a very small amount compared to what they really need. And but the gold, as you can see, already start feeling the pressure. It's demand for the United States dollar. Besides, as you know, the Fed absolutely doesn't intend to stop the quantitative tightening, so they are still grabbing approximately 95 billions per month out from the market. It's a really difficult times right now. So but technically on the gold market everything goes actually as it should, as we have suggested. To take a look at yesterday, we've got the tail close. Downward action has started with some tricks, but mostly in an area that we have specified. So on the 4 time frame chart, we're still keep watching for this pattern. Nearest targets around 1918, 1922. It's XOP, and butterfly that perfectly could just finalize this destination point. It doesn't mean that market just stopped there and turns up, but it will be just nearest standing target, and maybe some reaction also could follow. Next target, as you remember, is approximately 90 even. This is because of the strong weekly support. It's not some extension, but this is confidence support around 19 even, and it might be really important. Additionally, why the market so stubbornly stands around 1935, recall that this is a yearly pivot point. And the downside breakout of the yearly pivot point, well, it is not just something stable, something constant, but usually it treats like the opening road to the yearly pivot support one. It suggests the deep retracement on the daily chart. It's an important area. So in general, we could say that 1920, 1930, it will be some decisive point for the nearest term perspective on the gold market. So why this XOP is important, I just would like to show you the same example on Australian dollar. Actually, we have traded it, and recently this trade has been completed, and it clearly, definitely shows why these XOPs can't be ignored. Just take a look at this chart with Australian dollar. Recall our discussion about this. We talked about this ABCD, if you remember, got this triple to sell and tells that probably this will be some another spike. Just XOP has not been touched, and now you could see what will happen once the XOP has been completed. So this is always, when you see this such kind of the situation, it's always the risk factor if you would like to take the long position. And in this case, if you still decide to buy before XOP, your stop initially has to be placed below the XOP, just to avoid this type when you will be washed out occasionally when your position will be correct, but technically just to completion of the XOP you could be just washed out of the market. And currently on the gold market we have very similar situation. So XOP is still untouched, and it means that market has the big chances that it will be completed. On the hourly chart, well, I do not see currently something special. This is, if you remember, our hand and shoulders was a really tricky moment around it. But in general, as we said, keep watching for this. If grabber will not be formed, that they were not be formed, right there. And we said watch for possible COP target to be completed around this A, B, C, D area. So the COP, right there around 1970, as we talked, has been completed, and market immediately collapsed. Yes, it was not easy to deal with this. It's demands some skills and luck together, but this is the gold market, guys. The gold market is most cunning market among all of them. Gold and interest rate market. It's really cunning because they're all only professionals trading usually. So with this collapse down, I do not think that we need to worry about this stop and place stops right below the butterfly target. Supposedly everything we could treat that goes well if market remains below this collapse. So probably for stop placement it could be used this extreme point, or at some circumstances maybe even above a 618 level, because here we have the consolidation, and if market is really bearish after such collapse, we should not get too extended upper direction. But this is really difficult question to answer, because if you place too far stop, its risk-reward ratio is not very good. If you place it closer, you're coming to some compromise where your stop placement is not related to really vital points for the patron. So you will have to make some compromise. So that's the things that you need to think about and make the decision to yourself whether the situation is attractive and whether you really would like to take part in this trading. So speaking about the bulls, personally, I do not have any bullish view here and do not see any reasons for taking the long position by far. So that's what we have on the gold market, and let's see what will happen next.